The market has come back to life, and with it, the appetite for new all-time highs. Is Bitcoin already ready to reach for them? Let's get started. Hey there. Welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and the altcoin of your choice. We meet up, and as you already know, we take a look at the charts from 4 different perspectives: technical on-chain fire charts, and from the AI perspective, where we check setups on altcoin charts. That means you won't find such condensed analytical knowledge served up anywhere else on the web like we do here. We know you appreciate it, because the number of our subscribers is really skyrocketing. Thank you for that, but I also know that a lot of people watching our recent videos aren't actually subscribed to the channel, so now's the perfect time to hit that subscribe button, give us a like, ring the bell, leave a comment, whatever you feel like. And remember, it's very important that the content in this video does not constitute investment advice. For advice, consult a licensed advisor or simply do your own research. So if you're cool with that and ready for some analysis, let's get into it. So what has happened on the Bitcoin chart since last week? We can see that the symmetrical triangle we talked about in the previous video has been broken, and it broke to the downside. We mentioned that there was a risk that this pattern could actually be broken, and unfortunately, a breakout to the upside wouldn't happen so soon. We said that the simplest way would be to watch this triangle, and if 2 consecutive red candles appear, breaking our lower trend line, we can expect deeper declines, and such a drop, the strongest reaction, actually came on the 3rd day. We mentioned that price drops could occur all the way down to areas even between $93,000 and $97,000. And I have to admit, break time equals 0.5s/. The final price actually stopped just a little bit above that particular value, specifically in the precise area. Let me just quickly check 98,240. So it was really incredibly close to the initial target. The fact that the support itself wasn't actually reached can only mean that demand in moments of fear is really very high, which will also be reflected in the ETF charts that we'll get to a bit later. But you've probably noticed that an additional line has appeared on this chart, this solid line which you can see here. And this line, together with the upper trend line that we have drawn here, forms a descending channel that, just like a symmetrical triangle, also has the potential to break upwards. That's why, in my opinion, despite the recent declines that have occurred on Bitcoin, not much has really changed on the chart and the formation is still bullish. What's more, it's actually even more bullish because with an ascending channel, the correct play of such a formation resulting in an upward breakout works out in 72% of cases, whereas with a triangle, it's a few percentage points less. It's worth noting that, well, this line doesn't perfectly match up with this area, and you're probably wondering why. That's because I actually drew it out a few days before Bitcoin dropped down to this area. In fact, I shared this information on my Twitter, saying that I saw the potential for Bitcoin to actually go a bit lower, and that I would be looking for support around this dashed line right here. Why? Because the market likes parallels, like situations where we bounce off one area and then bounce again a bit lower parallel to that area. I was expecting such a scenario. That scenario played out, and we can see that the rebound is very strong. This is a rebound that, moreover, breaks through the 50-day moving average, which means we're returning once again to very important areas that could lead to further upward breakouts. That's why, in my opinion, this looks quite promising. Let's also check indicators like the TD sequential to see if they add anything here. Currently, we don't see any divergences, so from that perspective, everything is as positive as it gets. But let's also take a look at the RSI that we refer to quite often, and we can see that Bitcoin once again struggled with the 50 level and unfortunately dipped a bit lower. But since yesterday it has regained the 50 on the indicator, that is our middle line around which my cursor is now hovering. It has been regained, and once again, for the second time, basically 2 days in a row, it is holding above this area, which may indicate that buying power is prevailing and the bulls intend to keep Bitcoin running hot. It's worth noting that we don't have any significant discrepancies here, no divergences, neither bullish nor bearish. So really, in the current situation, the Bitcoin chart itself looks quite promising. Even though I'm currently very bullish on the Bitcoin market, I don't want to pull the wool over your eyes. And at this point, I'd like to dispel a certain hypothesis that's been circulating on the internet, which claims that an inverted head and shoulders pattern is appearing on the Bitcoin chart. The inverted head and shoulders and the regular head and shoulders are reversal patterns that appear most often. However, if we see an inverted head and shoulders pattern in a situation where there's already an upward trend on the chart, it can only mean that this trend is likely to continue. And we can assume that this is the kind of pattern we're seeing on the chart, whether it's the daily or weekly chart, specifically on Bitcoin, where we have one shoulder, a distinct head, and the other shoulder. Yes, structurally, it does look like a head and shoulders pattern. We can even switch the interval to weekly and we'll still see a very similar setup, which shows that here we have one shoulder, the left shoulder, the head, and the right shoulder. However, when we're talking about a head and shoulders pattern, it's worth checking one more thing. That extra thing is volume, and volume confirms for us whether this pattern is legitimate or not. What should the volume look like in this situation? If it were a legitimate pattern, the volume should be increasing. However, right now we can see that the volumes are decreasing, which means that at the moment when the left shoulder was forming, the buying volumes in particular were higher than those we see during the formation of, for example, the head or the second shoulder. If we switch the interval back to daily, once again we'll observe that this exact pattern appears. Why is this important? Because the price prediction from a breakout of this pattern could indicate that Bitcoin is capable of soaring even to a value of $150,000. Is this achievable in my opinion? Yes. In my view, Bitcoin will eventually reach such a value, but it definitely won't happen just because of a breakout from the current structure it's in. That's why my goals, my targets, are a bit lower. I still lean towards the idea that the range of 119 to 121 is a pretty logical price range that Bitcoin could rise to. However, I wouldn't want to pour too much optimism into your hearts and say that values like 150 are actually achievable, at least not in the short term. And if you'd like to learn more about volumes and how important a tool they are for assessing situations and setups that appear on cryptocurrency charts, be sure to check the description. There you'll find a lesson from Tango University specifically about volumes. I highly encourage you to check it out. So let's move on to the Bitcoin Fire charts and see how the largest order books are behaving on the biggest cryptocurrency exchanges in the world. Let me remind you once again that the blue line in this case represents the price of Bitcoin, while the other lines you see here indicate the sell volumes. If they are above our price, they are sell orders, or buy orders if they are below the current price of Bitcoin. And we can see that right now, Bitcoin has reached a certain zone around the $107,000 area, where there is liquidity of about $34 million in Bitcoin just waiting to be dumped onto the market, or actually not even waiting anymore, but currently being dumped onto the market. I expect that this area, with strong enough moves, might already be broken through by the time this material is released, because as I can see, the demand is quite strong. The remaining sell zones, well, that's basically classic stuff. Nothing changes here, 110 and 115. Every 5,000, we have these very large sell clusters. On the other hand, if we're looking for some support, there are a lot more support areas here, but they're also much less liquid. There's much less liquidity in these areas, and it's only around the $92,500 mark that we see by volumes of over $22 million in USDT waiting to buy Bitcoin in case of any further turbulence. But who is actually steering the market at this point? Who's buying? It's worth taking a look at the CBD, and we see something that basically hasn't changed for a week now. Whales are in the game. Our brown line represents those wallets that hold between $1 and $10 million. And as we can see, they're continuously buying Bitcoin. Besides that, we also have the orange line set very high. It's currently showing a slight downward trend, which means that retail investors, who are represented by this line, are slowly pulling out of the market. However, their interest isn't actually that low because just like the whales, they're still buying Bitcoin at the current prices. So the fact that this line is dropping slightly, I'd expect that to be more of a short-term factor. And in the longer term, I think we'll see a breakout to the upside. Now let's move on to Ethereum, where a lot has happened. As we can see, the gray box, our resistance zone, is still acting as resistance. Bitcoin bounced off this area and dropped below the 200-day moving average, which is our green line. It even dipped below the 50-day moving average and ultimately rebounded from the area of the 100-day moving average, which is our yellow line. This is a very important area from a technical standpoint because horizontally we can see support here that we've had marked for a long time around the $2,100 area. Coincides with this peak, which is located right here, for example. Well, besides that, we can see the moving average as well as the TD sequential indicator, which in the downward movement lit up the 9th candle, which means that hypothetically, in this case, a trend reversal is occurring, at least a local one, or increased consolidation, and we can see that this rebound is indeed happening. The fact is, I expected that Ethereum might experience a drop and could fall to around $2,330. That is, to this line, but this move was much more dynamic, much faster, and led to an even deeper price pullback. So the real buying opportunities were actually here, between 2,100 and 2,200. If you placed your buy orders there, congratulations, you really caught a falling knife. But what now? We can see that Ethereum, despite all these bullish indicators telling us that a rebound is happening, is encountering very significant resistance. First of all, structurally, it's falling into this area that was recently a consolidation zone, and it would be very beneficial for Ethereum if it could push strongly into it and continue that consolidation. Why? Well, because above all, it gives a chance that a breakout above this gray box, our gray zone that we've been watching for a long time, would have a chance to happen. However, right now we can also see that the 200-day moving average, which has often acted as resistance, can still be a resistance, but now at a lower price range, because currently it is around $2,570 and is trending downward. Additionally, the 50-day moving average is also in a similar spot, which could mean that Ethereum will face double resistance here. Nevertheless, I see potential for Ethereum to break through this area. However, let's also take a look at the RSI because the RSI might give us some hints as well. And unfortunately, here we can see that Ethereum is struggling at the 50 level, which means that although there is buying pressure, the bulls are not yet strong enough to fully take control of the market. That's why, for Ethereum, things look uncertain for now. I would prefer to watch this chart to see what happens, rather than enter the market right now. So what would I do at the moment? I'm simply watching the moving averages and monitoring the RSI. The moment Ethereum breaks through on the RSI, and when the 50 and 200 moving averages are surpassed, that's when I'll become interested in Ethereum again. However, probably only on very low time frames, maybe for scalping, because we can see this gray box and a very strong resistance that historically has really held up against Ethereum. As we can see here, for example, also when Ethereum was in a downtrend zone, we can see that from these areas at that time, Ethereum was basically bouncing off. That's why right now I'm approaching Ethereum with a lot of caution. Whales, however, are not showing the same caution towards Ethereum, as it turns out, because on the CVD we can see our brown line moving up very dynamically, which indicates that whales are simply buying Ethereum, while other wallets, as we can see, have completely withdrawn from the market. But let's also remember that whales don't necessarily have to push the price up significantly in order to make a lot of money in nominal terms. Percentage-wise, it might not be a huge profit, but in nominal terms, it is. So let's approach this topic with a certain degree of caution nonetheless. Now, let's also check the fire charts themselves. And on the fire charts, we can see that some resistance appears around $2,500. Interestingly, on the technical chart, $2,500 is exactly where the 50-day moving average is. So in this case, the moving averages are really working, and we need to be careful and wait until they are broken before re-entering the market. Well, unless you want to short, although on Candy you still can't short yet. Nevertheless, that will be possible soon. The altcoin you chose for today's analysis is Render, and I really appreciate it because I haven't looked at Render in a long time, and I can see there's actually quite a decent potential here to enter the market. Let's move on to the chart. Render, which is lighting up the 9th consecutive red candle on the TD sequential indicator, and it's lighting it up once again in a similar area as it did in the past. So we've seen something similar here, and on top of that, this is a very clear support level. Admittedly, we haven't seen any particular confirmation of this support recently. The last time Render was in these areas as resistance was basically in May 2023, but it's worth considering this area as still legitimate because we're already seeing a third bounce off of it. Here we had the 9th downward candle of the TD sequential indicator, suggesting that the trend might reverse. This happened precisely around $2.60. Something like this happened again a few weeks later in April of this year, and we're seeing a very similar pattern now, basically just a few days ago. We can see that Render is showing potential to move upwards. On the RSI, we already have what's called the oversold area. It's true that we're not seeing any divergence here, so we don't have confirmation for a possible trend reversal, that kind of extra confirmation. However, the potential is still forming here, and this potential is defined by a very clear resistance level. This resistance is located around $4.15, and if I remember correctly, we've already mentioned this value before during our analysis, saying that it's an important level both for support and resistance. Well, there's a reason why this line is on my chart. What's more, I'll also turn on the moving averages, and we can see here that right around this area, we currently have the 50-day moving average and the 100-day moving average, so a potential bounce of Render from these price levels is definitely possible. That would mean an increase from the current price to at least the lower threshold, that is, to the 100-day moving average of about 25%. So in this case, that's actually pretty good. And now let's look at Render on fire charts. So let's check exactly where the buy orders for this cryptocurrency are being placed. And we can see at the bottom the level of $2.50, where just a moment ago on the technical chart, we mentioned $2.60 as a very attractive buying option. we can see that those who trade on cryptocurrency exchanges are actually paying attention to what's happening on the chart, because these levels are coordinated with each other. We also see that there are some pretty solid buy orders around $3.05, which is just slightly below the current price. Now, in a situation where there might be some potential turbulence, I think these orders will keep render going strong and allow it to rise a bit higher. As for resistance levels, we can see resistance at the 3.27 mark. It's not particularly high. It has the characteristics. It has a volume of about $0.27 million in render, of course, just waiting to be dumped onto the market. So, in my opinion, these are values that can be broken through. What's more, let's look at the CVD, and here it might seem a bit disappointing because currently trading in render doesn't involve any wallets that clearly stand out from the rest. We don't see any very strong buying forces. Nevertheless, as we know from fire charts and CVD, these things can change very quickly. And if you'd like to move your altcoin, remember that it's a very simple thing to do. All you need to do is register on Kanga. You'll find the registration link in the description of this video. Take a look at the cryptos we have and leave a comment under this video saying which cryptocurrency you'd like to see in the next video. So go for it. It's not just Bitcoin that's forming a descending channel in the current situation. This is a common pattern that can be seen in many setups on a lot of altcoins. As we know, this is a bullish pattern. Apart from the channels, of which we have two in front of us right now, we also see a falling wedge, which is also bullish. Nevertheless, it's worth noting that channels by themselves give about a 72% probability of breaking upwards. That's actually quite a lot, but besides that, you can also trade within the pattern itself, and we can see that AI suggests that cryptocurrencies on Kanga, which are currently in a very interesting buying situation, include Curve DAO, Radium, and Optimism. Curve, in its current situation, has the potential to grow by almost 20% in just 6 days. As for Radium, here we have a growth potential of about 19% in 8 days, while Optimism shows a potential of 18% in just 6 days, so it's quite promising, and every time we look at these charts we've referenced here, it really looks very legit. We have a downward trend line, which in this case Curve has bounced off of multiple times, and a very clear drive to reach the upper trend line, also downward, but the upper line of our channel in this case. Here, when it comes to Radium, well, there's not much that needs to be said. It looks very similar, although let's pay attention to the long wicks. The liquidity is being pulled very dynamically, and there are sudden drops. That's why you should be careful when trading Radium. And then there's Optimism. Here, the trading is a bit more balanced, and we can also clearly see the price bouncing off one range and moving towards the other. So when it comes to altcoins, the current setups are bullish. There haven't been any breakouts yet, which is very important, but trading within the formations themselves can already bring quite decent profits. Despite geopolitical uncertainties, the ETF market in the United States remains very bullish. What's more, we haven't seen any sell-offs in the past few days. Maybe we've seen minimal buying, which happened on June 20th, and we can see that the volume bar appearing here is really small, very small. However, in recent days, we haven't seen any red bars at all, which is a very positive sign considering what's been happening in the aforementioned geopolitics. And right now, we can see that yesterday's volume bar, meaning Tuesday's, is one of the highest we've seen over the past 2 weeks. So in my opinion, things are still looking very promising. Time for on-chain analysis, and today I've prepared just 3 indicators for you, 2 of which will be updates on what we observed a week ago. The first indicator is the behavior of wallets holding a balance of 1,000 Bitcoins or more. Why do we mention these wallets? Because here we see a subtle change, and moreover, these are the wallets that we often, though not always and not all of them, classify as ETF wallets. And we can see that despite the recent declines, there is a slight rebound happening. It's not a particularly strong rebound, since only 5 of these wallets have appeared over the course of a few days. And from a broader perspective, we can see that what we're dealing with here is consolidation. But it's important to mention this indicator in the context of analyzing what's happening with ETFs, because what we see here simply confirms what the ETFs themselves are showing us. So from this perspective, everything looks very bullish. Let's move on to the next indicator, which is SOPR, something we haven't discussed recently. And we can see that this indicator is once again resetting very nicely and still hasn't reached the area, that black line of ours, where a full reset occurs. However, this is already enough for us to talk about a further continuation of the breakout to the upside. Let me just remind you that this black line marks the boundary between investors selling at a profit or at a loss. And in this case, it still hasn't been reached. Nevertheless, historically, especially during bull markets, it was reached. And from those levels, there were strong breakouts, which resulted in both the indicator and the price of Bitcoin itself soaring upwards. But we've already had 2 such rebounds recently, so we're not currently expecting a third one. And let's also check what's happening on the exchanges. That is what the Bitcoin balance on exchanges looks like. Here, the amount of Bitcoin on exchanges has been increasing slightly in recent days. This is justified in the short term because the price is also rising, so these are good selling opportunities if you bought during the dips. Nevertheless, from a broader perspective, we are still below those areas that until recently acted as resistance. Therefore, I expect that this indicator will soon turn around here as well and head downward, which is, of course, beneficial for the market because the less Bitcoin there is on exchanges, the higher the price can potentially be. That's it for the analysis. It's time for the contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or Render. Present a technical, on-chain, fire chat, sentiment, or fundamental perspective, whatever you like, and you absolutely don't have to agree with me. The author of the most interesting comment posted under this video by midnight on Friday will win 20 KNG from me. And the winner, or rather the winning lady, for the previous episode is Aga Tanyawapada, who analyzed the king of cryptocurrencies. Congratulations, Aga. Please contact support to claim your prize. And that's all for today. If you enjoyed this and these materials bring some value to your life, be sure to hit that subscribe button. And of course, like and ring the bell. Also, please rate this lesson from 1 to 540, where 1 means weak, bland, and you don't want more. 540 means fantastic, and you want more of it. And if you do want more, then I'll see you next week. Bye.